This is the week 11 of 2022, and this week it seems like the market bounced back. Monday, Tuesday, Wednesday, Thursday. Oh no, sorry. Today's Monday, so it's actually Monday was in close in red. So Tuesday, Wednesday, Thursday, and Friday, 4 days in a row, it went green, went back up. The market went back up. And it looks like um, it it's kind of broke this downward trend. So seems like the market is going back up, but we'll see if it's gonna come back down or this week to this Monday. So Tuesday and Wednesday, if it will go back up, then if it broken the trend, then maybe there's a chance that it is gonna go back up. But so far, this week is a pretty good week. It's good news for everyone. Let's see the percentage that went up this week. And I'm trying to look for the percentage sign here. Price range. There you go. From Tuesday to Friday, went back up around 6.71%. And the reason of going up is one of the reason it's the macroeconomic information, and one of the most crucial important information was the interest rate. So the interest rate had been 0.25% for a really long time. Let me see, since March of 2022. That's where the pandemic hit United States. The Fed reserve, they dropped from 1.25% to 25% and kept it all the way throughout these 2 years. And finally, as of March 16, it was increased by 0.25%, which brought it up to 0.5% as an interest rate. I think that's one of the reasons that have impacted the market this week, and also the war between Russia and Ukraine. Seems like the market has already absorbed the information and digesting the information. So it seems like that's one of the reasons that is going back up. And so one of the indicators that I looked at is here, which is EMA 1020. So as of today, March 21st, 2020, it touches here. It touches. So normally what this means is that this is a buy signal. If we are looking back before the historical data, if I zoom it out a little bit here, so whatever that is the color that's on the bottom, it will indicate the buy and sell. So as an example, it's kind of hard to zoom out, but okay, let's look at this as an example. So on September 17th, 2021, before this date, the bottom line is green. That means we should of holding the S&P 500. And then as on this day, September 17, it is a sell signal because the line touches and then the bottom became red. So let's assume that we sell this on September 17. Let's assume we are selling it at the lowest price, which is 44.33. And then so this, right, and then it have been going up and down horizontally for a while, like around like 3 weeks, and then here it touches again. So now after the cross, after it touches, the green line is at the bottom, so that means it's a buy signal. So I'm not sure if we can make a line, but let's just, I'll just use this here. So from here we sell it, and then from sell signal, assume we sold this, and then we buy here. So we have no gain or no we did not gain anything and we did not lose anything. It's been horizontal. Okay, now let's go on to, so I think this is a so it does not really matter if you hold it or you um or you're selling it. Now let's look at the next one. Green line at the bottom, so it's telling you to buy here at 44.58, and then this went up, up, and then down a little bit, kind of horizontal, and then there's a signal of telling you to sell this. So from here, if you buy this here at October, on October 15, was it? Yeah, 15, and then you sell here on December 1st, you have a little bit of gain between here and here, this little range here. Right? Just, yeah, you buy here and then sell here. Yep, you have a little gain. And then it is actually going, it touches again really fast. This doesn't really normally happen. If you look at the previous historical data, see, look, the green line is really at the bottom most of the time, between March and March and September, and is going an upward trend. That's why it's telling you to buy. But okay, let's go back to here. This might be a bit messy because it touches a lot here. So this is a sell signal and this is a buy signal. So if you sell this here, assume you sell this at this point here, and then the market actually went back down a little bit for a few days, went back up here for another few days. So actually in this range you would not gain or lose anything. And then again, this is a buy signal. It's telling you to buy here, and then it's telling you to sell here. So again, the same. It doesn't. So in this period, it doesn't have that much of an effect. It is pretty much the same as if you buy and hold, and to enter and exit, and buy and sell. So you will not lose anything here. Now let's look at here. This point is telling you to buy. It's a buy signal at 48 no sorry 45.80 on December 21st. And then right after this cross, it went up for 4 days, drop, up, drop, go up and down until here. It is a sell signal. So if you follow this indicator, you actually gain some profit. So this is actually better than buy and hold for this S&P 500. And on this day, January 18, it touches again, and then it is a sell signal. So you sell on 46.63, down, up, down, up, down, up, and then back here today where it touches again. It is a buy signal. So if you follow this indicator, instead of losing from this point 47.32 to this point 44.70 around, you actually gain a little bit. So this indicator is pretty much a quite helpful indicator that I looked at. It's telling you, pretty much telling you to when to enter and where's the entrance and where is the exit. So yeah, that's one of the indicator I use only for the S&P 500. I found this quite accurate. Looking at the historical data, it's a bit more beneficial than buy and hold. So this is something that I will be continue using. So it looks like as of today, it crossed just right on here today. And the market actually for today, Monday, March 21st, actually did not move that much. Went up and down and then closed on a red a little bit, but did not really move that much. I think let me just check. Yeah, S&P 500 today was down by 0.04%. Did not move much. So we'll see how it goes the next few days. My guess would be, since it's a buying indicator, it should go back up, but there's a chance that it will cross again after this point. So it seems like it might repeat what happens at on December December, where it touches, cross, like touches again, touches again. So we'll see based on this indicator. Aside from that, looking at the macroeconomics, aside from the one of the most important macroeconomic data, the Fed rate, also the oil. It's the price been spiking up like crazy for the past few weeks. So see, yeah, as you can tell, the forecast is, it was estimated at negative 1.4, and then the actual was actually 4.34. Yep, and this is and as it mentioned here, the crude oil inventory measured the weekly change in the number of barrel of the commercial crude oil held in the U.S. firm. So it increased a lot higher than what it was expected in the past week. Let's look at this the upcoming week. It's actually this week's data. So that would be 21st to 27th of March. So we have gold index, share power speak, nothing too nothing too crazy. As usual, home sale data, PMI, and then home sales. Yeah, so not yeah, so nothing too crazy this week. But last week it was a crucial week because the Fed released the interest rate, and then the crude oil was really fluctuated, and it changed the price went up a lot. Speaking of that, let's look at the US oil fund. Yep, so for the around the beginning of March, went up, went back down. Now it today actually went up by a lot. Yeah. So we'll see how it goes for the US oil. So yeah, let's all follow the market, and especially the S&P 500. We'll see if we'll see how it goes this week. Yeah, hopefully it's actually really broken this trend, and then will continue to go up. But we'll see again next week of the based on the market.